continues. 89.67 is where the record low of the rupee now stands against the US dollar. It's depreciated almost 90 paisa since the very recent against the US dollar. So the weakness in the rupee continues. We had seen a very similar move last week as well, and the rupee fell past a very critical level that the RBI had been defending for a very long time, and then we saw that one-way move towards the 89.50 mark, and after a few days of hovering around that 89.45, 89.50 mark, today we've seen yet another one-way move on the downside when it compares to the currency. A 90 paisa depreciation against the dollar since the 3rd of November. So it's almost a rupee. The currency has depreciated in almost a month now. So 89.67, the new low for the currency. And we'll get more comments on this. And this is coming right after the GDP print and right before the RBI policy. So there are, of course, a couple of other important things that need to be tracked when it comes to the currency. But the markets as of now, they have also come off the highs of the day, and so 26,250 is where the index currently stands. But Ritu, the rupee now continues to remain the key monitorable. It does look like the RBI is not willing to defend some very important levels.
Well, yes, last time we'd seen RBI move away from the markets for a little while when you saw the currency slip there. But, this is a 90 paise downfall. That's a steep fall that we're seeing on the rupee. And we have Mitul Kotecha, who's the head of Forex at Barclays, joining in. Mitul, quick reading, rupee at 89.66 to the dollar. What's gone wrong there?
Well, it looks like RBI are not at the moment
providing support.
These levels. We thought, obviously, there would be, or a lot of investors were looking at sort of 89.50 as a sort of a new level of resistance for dollar rupee. It hasn't been the case. Again, we would be surprised if they allow this fall to in the rupee to get out of hand and for it to slide dramatically. And I think a lot of people will now be looking at 90 as a new sort of level or new line in the sand. But clearly, this move has taken place at a time where we've just had some very decent GDP numbers in India, which should have been more positive for the currency. Capital flows or portfolio flows have been also less negative recently, and yet we're still seeing this inherent dollar demand coming through here. So it does look like RBI allowing a little bit more weakness in the currency here, but we would be surprised if they don't step in at some point soon.
But you're saying 90 is coming, Mitul? I know we're not very far away from it, just about 34 paise. But that would be the level to track. And what happens if we do get progress on the India-US trade deal?
Well, I think, look, 90 is psychologically a very important level. We've been highlighting that it's a matter of time before we break 90, although we probably wouldn't have expected it to happen so soon. But again, I think if there is a trade deal announcement, it would probably see a knee-jerk rally in the rupee. And again, at the moment, there's been a lot of anticipation, continued comments from both the US and Indian officials that a trade deal is close at hand, and yet we still haven't got anything in hand. So at this moment in time, that could be a saving grace for the rupee at this, if we do see an announcement. But the question is how long any rupee rally would persist for. We think probably it would be a short-term knee-jerk rally in the currency, but it would provide some relief.
But, any further narrowing of the interest rate differential, given, the RBI is set to announce its policy this Friday, do you think that could put further pressure on the rupee?
Well, depending on what the RBI do, I mean, if they cut rates, then it could add a little bit more pressure. But ultimately, we think now that certainly after the strong GDP print, it seems unlikely that the RBI will cut rates at this week's meeting and probably save their ammunition as needed, even though inflation remains very, very low. There's no urgency here to ease policy. If anything, the RBI may want to inject liquidity and try and use alternative methods to try and keep liquidity ample in the system. But I think for a rate cut, yes, if they cut and it's dovish, markets would probably perceive that as more negative for the currency.
89.76 now is where the currency is. So further depreciation from the 89.67 levels that we just spoke about, Mitul. And you are mentioning that 90 is now a very important psychological level What is the street possibly trying to price in when you see such kind of depreciations? Because such kind of moves you don't get to see very often. We saw and we've seen 2 such moves in a matter of a week.
That's right. Look, I think there's just inherent dollar demand. I think the reality is that importers have probably been holding back from buying dollars in recent weeks, and we may be seeing some of that coming through. At the same time, as forwards roll off, you also see some inherent buying of dollars. So it's probably a combination of factors. I'm not necessarily sure that this is suddenly the market turning particularly bearish on India's fundamentals or the rupee itself. After all, the currency is extremely cheap on a valuation basis, so it's not as if there's a huge amount of benefit here from weakening the currency even further. And it's also not as if India is suffering from any sort of balance of payments issues. This is not the case. So again, I don't believe necessarily that this is a fundamentally led weakening of the currency, but it is a case where the inherent dollar demand on any dip or these sort of levels continues to come through, especially against a backdrop where the US dollar itself has been firm in recent weeks.
But 27 paise now, Mitul, that's a very steep decline seen in the Indian currency. You're saying there is absolutely no trigger day on day over the last 24 hours, which explains this fall?
Well, fundamentally, it's hard to see anything. You could argue the other thing. If there's been the fundamental news has been positive, the GDP print was strong, and if anything, that may have also dampened expectations of a rate cut. So when you talk about rate differentials, it should bode well for the rupee. So it's hard, and certainly we've not seen anything here that would trigger this from a fundamental perspective.
Let me get in Lata as well into the conversation. Lata, you want to first comment on what we're seeing right now in the currency market?
I can tell you what I'm picking up from forex dealing rooms. Mitul, of course, has given you a version. As Mitul said, it's not anything special that's happening today, but on a daily basis, irrespective of what the macros are, the flows, the outflows of dollar are more than the inflows. I mean, it's no secret that we are seeing continually almost 4,000 crores of sales over the last 2 days. We saw a dip last week in the portfolio sales, but it picked up again by the end of the week. And therefore, there is that demand to buy dollars by people who are moving out. The Reserve Bank is the only supplier in the market sometimes because exporters still believe they can get a better deal. So it much depends on what the Reserve Bank is thinking. So the dealers are now trying to outthink the RBI, basically. The explanation I got from dealers is the Reserve Bank has decided to let go in a gradual manner. And, allow the market forces to take over. They're probably also telling the market that maybe a cheaper rupee is the solution to, this gradual, continual, persistent attack on the rupee. At a point, the rupee becomes attractive and stocks become attractive. So the Reserve Bank's point could also be by indicating it is comfortable with a gradually falling rupee that, the current account deficit gets resolved. Imports will become expensive if you're going to multiply every dollar with 90 instead of 85. Imports will fall and there will be a gradual and natural correction to the current account deficit, which obviously went up very sharply in October. So it could be, applying the balm. This is their way of applying it and doing it in a gradual manner. The other interpretation I picked up, and Mitul alluded to the rate differential, now the expectation will be that RBI won't cut and therefore actually that should be pro-rupee if RBI won't cut. Yeah. But the market is veering around to that view probably, and that is why there is more FPI sales. Equity guys want the cut. So maybe that is also leading to an increased selling. But all this is guesswork. All we know is that there are foreign portfolio investors buying out dollars. There will be traders who will front run them as well. And the only supplier or the only material supplier of dollars in the market is the Reserve Bank. And so the dollar rupee exchange rate is where the RBI wants it to be.
Okay, so RBI letting the rupee gradually weaken, and now it appears to have stabilized around that 89.73 mark. Mitul, thank you very much for joining in with your perspective. The very sharp fall in the currency has also dragged the markets into the red. The Nifty is now below 26,200, given up all the morning gains. Remember, we hit a record high in the morning on the Nifty at 26,325, and now we've slipped close to about 150 points from the top. Get into a break. We'll come back with more.